Alright guys, how's it going? Welcome to the midweek market update. Hope it all having a fantastic week so far. So yeah, euro dollar. We'll go through the price action in a bit, but kind of just similar to what I was saying on the weekend. Obviously trying to do my best to get as much of the course videos that I was planning to get released to you guys by the end of this week ready. So yeah, kind of running out of time already. Kind of just trying to work around the clock to get this done, to get as much of it out to you guys as possible, yeah, for the soft launch at the end of this week. So yeah, I haven't been looking at the charts whatsoever, so I've just spent the last few hours going through the last last 2 or 3 days on euro dollar. Yeah, I'll just point out a good few trading opportunities there. But yeah, sorry, these breakdowns are not going to be kind of to the standard that I would usually expect of myself, or the standard that I want to have them at. But yeah, hopefully you guys understand why. Yeah, and I thank you for your patience. It will be worth it, I promise you, as you get to go through the course. And then yeah, when I'm back towards the end of the month, going into October, normal service will be resumed. So daily chart, coming off a very, very strong, or in my opinion, what I believe to be a pretty strong daily supply zone, because it's taken liquidity, right, caused that huge move, and now we've pretty much mitigated the EQ after again sweeping really nice big equal lows there, that weekly low. And sometimes we can just use a bit of common sense, right? What kind of reaction do we get, right? We haven't really trickled out. We've had a reasonably impulsive, right? Yes, on a daily chart, the candles could be a bit bigger, but it's a pretty decent mitigation in, and a reasonable V-shaped move back out, kind of taking that more minor break of structure there to the upside. So like I was saying, really I kind of want to see this daily high. For me, this is a bit more of an obvious daily swing high. I would like to see the daily start to get above there. We tried to break up above there on Friday, but we essentially just waked it by a pip or two, right, and then we started to retrace back. So it's a very, very weak break. It's not like we've had a nice big sweep, essentially mitigating a decent supply zone there, and then retraced in, because then I'd maybe be thinking, okay, potentially we are going to come down and take this low, because that would be a very, very bearish sign. So over here, right, where we're trending to the downside, right, that was a lower high, that was a lower low, then price came out, tried to come up lower, but then it just had this big sweep of liquidity up here, right, this big wick break, tried to break up above the high, but then it got slammed back down. I believe, if memory serves me correct, there was a really nice 4-hour zone over here. Price slammed back down, right, big grab of liquidity, big mitigation. That's a pretty bearish sign now, right, that it's grabbed the fuel to take out this low. A bit different here. We've literally tapped it by a wick, right, and we've barely retraced. So yeah, I'm trying to think. There's a recent example that I think where we came down and we just wicked something. I can't remember if it was on euro dollar, but anyway, yeah. So in my opinion, I think this could just be a short-term pullback, right, looking for that kind of internal daily high low to form potentially around this daily flip zone. Makes sense to me, because we had supply, daily came into it, reacted, pushed up, so it looks like a pretty decent daily level, right, to look for that high low to then potentially run these highs. But that's again where it'll be a bit tricky, because if we then get that nice move, right, we get that kind of daily high low and we break these decent highs to the upside and we get a closure above, then I would be pretty convinced that we are turning solidly bullish here on the daily chart. But what gives me kind of concern about that is this is building pretty nice inducement just below this zone here. So is that just going to be providing the opportunity for price to then do this, tap into here, and then go? I have no idea, right? I'm not totally convinced in these either way. I would more still be, more bullish to the upside, because, well, one, we are still within this weekly bullish range, right? The weekly high and the weekly low. We've tapped into this pretty strong zone. We've swept liquidity. We've had a pretty strong V-shaped move up. We've taken that high there. So I think this is just a tiny, tiny grab of that, liquidity sitting behind the external range, right? Just for that pullback down into here, and where I will be then looking for that higher low to form, and see if we can really start to target up into around these areas around here. So 4-hour chart, here we can see, right, that sweep liquidity, and we started to pull back to the downside. Now, one thing I'll say about this is, for me, you can see where I've marked these kind of swing highs. So that was a 4-hour breaker structure for me, and then that didn't really count as a pullback for me, right, because we didn't get the closure until really over here properly. So then that was a decent enough pullback for me, and then that's one leg up there. So that means that the 4-hour range we're playing within is here. But when you kind of look at this move, right, that kind of is really, although I'm kind of defining that as a daily run up, you can see how on the 4-hour chart, this swing pullback, right, it doesn't really stand out that much. So it's not the most convincing of swing ranges. So, I am trying to be mechanical, and I am viewing that as my 4-hour range. And we have now come down and mitigated that extreme, right? Even if we are to now refine that zone, we've come into here, and this is a very good area for price to potentially form that high low. And I will be working on that basis. I'm more kind of just, pointing out, using that little bit of discretion to say that this is a pretty big push up. So I wouldn't be massively surprised if potentially, we just have another reaction from here. If the bearish order flow stays intact, we may then be coming down and towards this daily zone. Well, then, that would be a really good area to potentially start looking for those longs. But that's, like I always say, right, let's try not to forecast too much, just not trying to get too ahead of ourselves. For now, that is coming into the low of the range. So for me, this is pretty decent value to start to look for those longs. Let's see where we are within the actual daily leg. Yeah, so we're not even really at the EQ yet. So in terms of the daily move, I wouldn't be surprised if we did come a bit lower, but I would be more than happy to look for longs to try and start to take out this high for now. But whilst the order flow is still bearish, of course you can look for shorts on the way up to try and hedge those positions there to the downside. So only other thing I would say, especially at the start of the week, after we'd taken out that high there, and with this kind of being almost one big vertical leg, it was pretty likely we're going to have that deeper pullback. Even when we kind of came into this 4-hour level here, right, we initially if we take the whole range, right, we had a bit of a tap in there, I believe that was Monday, and we pulled up. But even at that point, what are the odds that, the next high low is going to form here and we're going to keep going, especially after we've swept, the external range liquidity there. It was pretty likely we're going to have a deeper pullback. Also, this zone is pretty messy. It's not the most convincing of zones. And another thing about that zone, I've done a whole lesson on this in the course, which you guys will see shortly. Something I'm digging into a lot more lately as well is, zones that take liquidity when they're created. So sweep zones, right? Now, in this case, it didn't really take liquidity when it was created. Arguably, and this is something that I haven't got a lot of data on this, I haven't seen it a lot, but arguably you could say, well, we had 2 inside bars here, right? So that's going to be a lower time range, and actually price swept that lower time range, right? Those inside bars, and then it made that move. So yes, technically that is a sweep on liquidity, it's a sweep on that intraday range, right? And then we've gone. So that gives it somewhat, decent confidence. But what I kind of want to see is, that logo there, right? It take out more of a convincing low here, and then it goes. So this is a much better example of what I like to see, where price comes down, has a much more convincing, that would be a 15-minute pullback. Then it comes down and takes the low, and then it goes, right? So it takes the liquidity behind that high, right? Because that high here caused that lower low. So then when price takes it, right, there's a decent amount of liquidity that should be behind that high. So that's a pretty decent sweep zone in my opinion. And I've just found, that tends to have the better zones, whereas this one didn't really have that. So it'd be interesting to see if you guys kind of notice that as well, or just keeping an eye on these ones where they don't necessarily take kind of the more major low when they go, but when it does take those kind of inside bars, technically that is intraday liquidity, right? That is a range that has been swept and gone. So just interesting to kind of keep an eye on that and see what you guys think. Like for me, this would be a sweep zone here, right? Because we came down, we tried to make a high, then we came down, right? We swept that low, and then that fueled the move to go. So that's the kind of zone that I like. Also, what's not great about this, right, is it's not, it's not the most well priced. You're looking at this entire leg here, right? What are the odds that this zone is going to form the high low? There's an edge there, we can look for longs, but what the point I'm trying to get across is I'm not too surprised that we started to pull back. And even though we're already at the 4-hour extreme, again, I wouldn't be too surprised if potentially we were to roll over and come down towards this daily zone before we go. But let's just take our setups if and when we see them. 15-minute chart, so pretty messy price action after NFP on Friday, and we were just chopping around. I believe there was a US bank holiday on Monday, I think we saw pretty choppy, slow price action in the afternoon during the New York session. So this wasn't really the best time to trade, in my opinion, if you kind of wanted to take Monday off from live trading, because what we essentially had is this was our swing low, right? And we came down and we broke that low. So at that point, I believe I would have had this M15 zone drawn on, right? We did come into that zone, and you could have initially looked for longs from here, because what do we expect after a break of 15-minute structure? We expect potentially that 15-minute pullback, right, to then try and catch the lower high for that next 15-minute pullback, or that next 15-minute lower low, I should say, to facilitate that 4-hour pullback back down into demand, right? So at that point on Monday, I believe it was Monday morning, Monday morning, right, we get that first break of structures to low, so the M15 has now switched bearish. The very, very kind of first demand zone it comes into, you can start to look to play longs from here, but like I was just saying on the 4-hour chart, you have to kind of understand that, is this the best area to be looking for longs? It's kind of the start of that bearish trend. It's the start of the pullback. We're likely to come a lot lower. It's kind of one of those ones where it's valid, but you just have to accept that you're not necessarily getting in the best areas. So if you get your M1 set up here, or whatever execution time frame you look at, it's valid, but you may just want to kind of manage your expectations a little bit, that it might not be the best opportunity. Then we come into the one a little bit lower, and there was another opportunity in here, and then eventually price does go. So I'll tell you what, let's just kind of go through this at the same time as the entries, just so we don't get lost with where we're at. So the area we're looking at is when the M15 switched bearish and we came into that first area of 15-minute demand to try and play that bullish pullback right within the bearish trend. So if we go over to the M1, which is over here, so we come into that M15 level. We do have, to be fair, on the M1 a pretty nice reaction, right, showing those orders being filled. Then we don't get any change of character, right? There's no flip or anything. We're just ranging around. We're just building that liquidity. Price then sweeps that liquidity, right? Mitigates a bit further into the zone, which is nice. And then we come up into the range, right? So if you took, let's draw down the entire kind of buy to sell range here, right? Depending on whether you're happy to take the range or if you prefer a bit more of a, refinement, then this is kind of the range way in which you can do it. So we get the reaction, and then you can draw that across as your M1 reaction there. Obviously you wait for a break, and now the most aggressive way to obviously trade a reaction is to just get in as soon as after it fails on the retest, right? So anywhere within that buy to sell range technically is an entry, although you may obviously want to refine it to the inside bar or even down to that wick there. But I'll just kind of show you the most unrefined way, and that would be a pretty aggressive way to get in. It's aggressive because we don't have that change of character, right? The M1 is still fully bearish at this stage. We don't have any sort of change of character until price takes out that high there. So this would be kind of your most aggressive way of getting in. The only thing about this is if you were needing to cover the low, actually I haven't even drawn that right, it would have to be a bit lower to there. You would need a bigger than 2 pip stop, which for me personally, especially with a trade in an area that's very aggressive and I don't want to get, I personally wouldn't do that. So at best I would have my 2 pip stop lined up like that, and then probably there, and then I never would have got tagged in on that. But how else could you have got in? Well, slightly kind of more higher probability way is to wait for that change of character. So then what you can do is you can refine this to that last point of supply. That's then where you get reaction. Then you get your change of character, and then instead you'd be looking at kind of that last point of demand that came in to cause that break of structure. So essentially anywhere from where the reaction starts, you can do that, right? You can take that whole range, or you could obviously refine it down to that wick there, but let's just kind of be conservative and take the whole range and then see where your 2 pip stop lines you up. So yeah, you get in pretty much at the top of the range there. But of course, this is what I mean, like it barely runs in profit, and then you would have been stopped out as we reject those buy to sell wicks on the M15 that caused the break of the low. So not the best area to get long from, but okay, whatever, you take a loss, not a problem. And then we push down, right? We push straight down through the zone, because now we get what? We get that kind of flip, we get that failure of the zone. So then we come down to this next inside bar here. It has inducement above it, so yes, an alright zone. Price comes into it, nice strong mitigation away, right? In and out, that's what we want to see, big orders being filled. Price comes into our demand zone, right? Whether you take the candle or the range, it still leads you to the same point in this case, right? So we come into there, we then have our failed reaction here, and then we have our chock there. So you can get long where, you can get long if you like it, anywhere within that buy to sell range there, or of course you can refine it to the inside bar because it is pretty big. We even get then more liquidity building in front of the zone, sweep, and then we go, right? So that can be a pretty decent entry here. If you were to take that as your first entry or second entry, you could get one away with a 1.5 pip stop. Let's just be conservative and go with 2, right? And then we're trying to obviously play that M15 pullback. So ideally you want to see that M15 change of character, which eventually we do get. And then this trade peaks at about, I mean, that gives you pretty much 5R to that change of character. So it is counter trend. You may be pretty much in and out, or the majority of your volume off there at 5R. Or you may want to try and push this up into premium prices into towards supply. So yeah, that ends up peaking around 13R, depending on how you manage that. Ideally, you would have partialed out about 4 or 5R. You'd have taken 20% of your volume off to cover your stop loss, so you don't actually have to trail your stop loss to break even. And then hopefully you would have survived through that pullback there with your remaining 80% of your volume if you hadn't already partialed out most of that at 5R. Right, so on and so forth. Everyone's going to manage things slightly differently, but I kind of just want to show you more the logic behind the entries here. So yeah, that kind of really wraps up for Monday. New York was shit, to be honest. Like the minute we kind of got a change of character, yeah, but all of this ranging around, especially if you kind of see around half 1 to 2 when New York's supposed to be opening and big moves are kind of supposed to be kicking in, nothing's really happening. That's kind of your signal to just leave it. Especially we're not in any good area, we're not well priced. Whoops, should have the 4 hour there. But we're at the start of what we should be expecting a 4 hour pullback, right? We literally just went up and up and up all of last week. We're going to expect a bit more of a sustained pullback. So yeah, I think, getting longs, you don't really want to push those too far. And then we came up and mitigated this area during Asia. Now this is kind of a funny area, because remember what I was just saying before about I'm starting to pay a lot more attention to these sweep zones, right? Zones that take liquidity as they're created, which it's not the best, arguably, right? It takes the liquidity behind the high because price comes up, it mitigates supply, it tries to go lower, right? That's the reaction failing, but it's kind of sweeping that liquidity, and then we come back down. So yeah, in a sense, that's a pretty decent sweep zone, but it left like perfectly equal highs behind it. And again, this is something I've spoken about before, but I also speak specifically about this in the course, that with the liquidity, my personal approach is to kind of try and just react to it, not predict it. So kind of, what I mean by that is to see those equal highs, be wary of them, and if I was looking to trade this level, obviously I wouldn't be, because it was bang in the middle of the Asian session, I'd be fast asleep, tucked up in my bed. But let's say this is one you were looking at the start of London, right, and you see those perfect equal highs, you can be wary of that, and maybe you want to see a lot more confluence with your lower time frame confirmations when price comes into here. But this is just a great example of, if you see everything you need to see, then kind of, just ignore them, right? Then potentially you get an entry, then it gets swept, then we come down, right? And then you get another entry. Okay, fine, there's your second opportunity, and you have even more confidence now. That's kind of my personal approach, to kind of, with liquidity, right? Structure and supply and demand zone is king for me, right? That order flow, supply and demand comes first, and then kind of liquidity is last. It's just that little extra refinement. So yeah, coming into London, let's see, around 7 a.m, kind of as price is then pulling down, right? It's very likely that 15 minute lower high is in place. So we just sync these up, right? Ideally, you kind of want to be trading short to try and get that deeper 4-hour pullback, at least into this next 4-hour zone, right? We have the M15 bearish, but potentially you could also be looking at those pro 4-hour trend longs if you're feeling a bit more aggressive. Kind of the way you can justify that, right, is because we came back in yesterday on the Monday, right, and we'd mitigated that 4-hour range. We did then get that M15 change of character. We also got a M15 minor break of structure with a fair amount of volume as well, or momentum I should say, right? Pretty decent move there. So when we're pulling back at this case, you can start to look at, these are kind of the more obvious POIs for me, right? This zone here, and then the unmitigated wick below. Probably would have been looking at that inside bar as well there, right? That's kind of where a flip occurs here, and we've got liquidity in front of it, right? Inducement in front of it. There's kind of the 3 decent zones I'll be looking at to see if we get any confirmation entries within there. Just to essentially try and anticipate, maybe we are going to another aggressive high low, and maybe we are going to continue, that pretty vertical 4-hour trend. So, the entries and the logic are there. You just kind of have to understand, why they didn't really work out in this case. So, it's having that neutral mindset. If you get the opportunities, you're playing the extremity of this quite large range, you can get away with it, right? 2-pip stop is going to be a decent enough risk to reward, as long as you are actively managing that. So what you can then do is refine, obviously, those M15 zones to the obvious M1 or M2 or whatever POIs within there, the ones that make sense. So kind of looking at these are the ones essentially I would have picked there, right? Pretty obvious one. That's a really obvious one. Nice flip zone that then leads to the actual break of structure there. And then we have this one. You can take the whole candle, but it's quite large and it didn't get engulfed, so that you can refine that right to the wick there. And obviously that's a pretty obvious one down there, although that is a bullish candle before a bullish candle. So you can go through the 2-minute, 3-minute time frame, etc., and actually find wherever the last sell is before the buy, if you want to be kind of very true to the way that those demand zones should be defined. So what you can see is we come into that M15 zone, and then if you have kind of done the work and you've refined that to a pretty clean M1 zone that you like, but more importantly, you see that price literally taps it and then has that aggressive move away, right? That's bingo. That's a pretty good sign. Whenever I see that gives me a lot of confidence to start to look to get involved. So I'm not going to jump down into the second time frame. There was second entries within here. Let's try and be a little bit more conservative at the moment and just look at these M1 entries. So what do we have? We have our supply. Come into it, reaction fails to make a lower low, reaction fails, and we get the change of character. That's our A+ sort of M1 entry model. Price then comes in, and then you can get long anywhere within that range, or obviously to the refined candle. Let's go 2-pip stop, right? So yeah, you can take that edge of range more than enough, and then 5R, more than 5R up to that next area of supply, up to that M15 zone. You've got over 6R there, so be pretty aggressive with your management there, because you are still technically counter to the M15 trend, but of course you can leave some volume on with the potential, bit unlikely, but the potential that could have been that 4-hour high low, right, to go from there. Or if not, just look for the hedge to try and get short. So obviously as we come into this M15 zone here, right, it's kind of that last buy before the sell. Not great. Arguably it takes liquidity behind that candle there, and then obviously mitigates that last point of supply there as well. We have these M1 refined zones within it, which, you know, it's kind of really the only obvious refined zone within there, but it's not, for me, it's not the nicest candles, right? It's kind of just chopping around. It's kind of left those equal highs as well. If this had to come up here, swept those equal highs like that, even just by a pip, and then come down, that would have been perfect. I would have had a lot more confidence in this. And yeah, as you can see, price came into it, and technically it did spike up through. So for me, that actually is that zone failing. That is actually kind of the sweep happening there. And then we go off, and then there's probably a seconds entry within here, right? Because you've got those sell to buy wicks. It reacts, it fails to make a high, it comes down, then it pulls back into it, right, with that candle into that inside buy range, and then we're off. So it's probably a bit cleaner on the 15 seconds or 5 seconds. But in terms of the M1, probably I would say you kind of got more something like this, right? That's the range. Price comes into it, inside bars your reaction, and then you don't come in to mitigate that much later on. Where then, you know, if you were looking at this again, what do we have? We come into our M1 demand over here. We react, we push up, so then this would be kind of where I'd be looking to get short, so probably would have been stopped out on that one, as it ends up mitigating. Yeah, if you took the distal, you'd be stopped out. If you took the EQ, you would have survived it, but usually I always mark it up. Like if I can get my 2 pip stop behind the range that I've drawn, then usually I'm always going to take the distal because I just want to get in the trade, right? But in this case, this is kind of potentially where you could go, well, actually, you know, there's that wick. It's kind of part of the movement, right? Because what happened, price came in, it reacted, it pushed down, right? Then it ranged a bit with the inside bar, and then it went. So technically, well, you know, that's what we can see. That's the reason why price came up, to get that last bit of supply within that entire reaction. So maybe this is where, you know, really you should have, instead of just taking inside bar, you should take the true whole range, because that is the whole reaction. And then you would go, well, actually, I need to protect my 2 pips behind it, and then you would be in. So very easy for me to now say that with the benefit of hindsight here, but this is kind of just a thought process of how I would be trying to learn, you know, from going back through this price action. If I say this thing again where it's a little bit messy like this, and actually that is, you know, all part of the reaction, you know, there is the risk that price could come up to have that. So maybe this is where I do want to make sure my stop is behind that range, and this is where I end up, you know, going from somewhere within the range near the EQ rather than there on the distal. But what I also would say about this area here that I didn't really actually, no, that one's okay. So what I was going to say is, you know, obviously we were just following the M1 mitigations here and coming back in. That was then the reaction again, confirming the old flip from here. Then we're playing the flip from the confirmation, confirming that zone, right? But also I actually did like that M15 zone, because although we didn't get a closure below, it's more that you can see the bearish order flow staying intact right at that point, because we've come up, we've mitigated this area here, we've come down, pulled back up into supply, we're holding, taken the low, which means the demand here failed. So yes, we didn't get a true break of structure, we didn't get a candle closure below this orange line, right? But then price comes into that M15 supply zone, and then you're also, you know, getting all this M1 price action. Price is choppy, it's rangy, it's horrible, it's not clean, like, let's be honest. But if you're going to trade this way, this is a decent time to do it on the M1, because at least it's quite, you know, a large is again not a great word, but at least there's room, right, to play the edges of the range. As long as you're not trying to mess around in the middle part and you're just sticking to those extreme turning points, right, but getting nice big kind of sharp turns away, right? Play the bottoms, you can look for the longs down here and you can look for the shorts from down here, but you just have to be a little bit more on it. But yeah, overall, it's not the best price action. So this is the zone, actually, what I was referring to earlier, that I didn't like, because if you saw a price come back in, and yes, it comes into these areas of supply, and yes, you can look for shorts here, and yes, it is valid, but the reason why I kind of wouldn't like it more from a market structure point of view is because what has the M15 done now? Well, it's taken the low, it's retraced, it's come in to mitigate supply, then it's tried to come down, right? That high has tried to make a lower low, but it's failed to do so. Demand is now holding, so then when we come back into here, well, actually, this is technically a weak high because it failed to take out the low. So, you know, it's not a great zone, but if you just find in terms of following the series of mitigations, then yes, okay, then you have a bit more confidence to take it, right? So it's there if you wanted to trade in here, but it's not great at that point for me. So ideally you'd already be in the short here, and then this would be the one that you would try and hold on some of your volume, right? Obviously you'd partial pretty heavy down around here, and then eventually that's the trade that then eventually goes, and then finally we get that next M15 break of structure, and now we're starting to approach this kind of shitty area of 4 hour demand. So I don't know why that hasn't dragged across on this time frame, but yeah, there you go. So pretty clean M15 zone here, right? Obviously takes all the liquidity from this kind of trend line here. Big aggressive mitigation in and out. Yeah, just very clean M15 zone, but just quite a bit large. So you may want to refine this on the M1 a little bit more. But this is just another lesson, right, of if we're in that area where it's not great, it's not well priced, we're pulling back, bearish order flow staying intact, we're just seeing constant series of bearish mitigations, right? Supply is never failing, it's always holding, continuously the last few days. This is where I just say just be patient and just wait for an M15 change of character again to the upside. Like at least over here, we had that M15 change of character and we had that minor breaker structure up here. So then the longs kind of make a little bit more sense here. But at this point where we're just coming down and we're getting no change of character, supply is holding, just be patient. Yes, you can trade the longs, but is it really the best idea to do that? Until if we come down here, we're near the extreme of the range, we have a stronger 4-hour zone. It's a lot cleaner, like the candles. It took liquidity. Technically, it's actually where the reaction failed, right? From the previous 4-hour zone. So this being our 4-hour zone here, that being the reaction, that movement there is actually where the reaction failed, rather than this movement here, because it's this movement that actually causes this zone here to fail, right? So this, has a lot more reasons going for it, for why when price comes into it, then you can start looking at your M1 straight away, potentially, without waiting for your M15 change of character. But when you're in kind of shittier high time frame zones, that's where I'd say you may want to be a little bit more conservative. And then that way you can avoid trying to get long and all of this mess. So then all of this happens during the Asia session, right? You can see supply holds again. We come down from this demand, and then we have a flip. So that could potentially be a decent area to look for shorts going into London. But as you can see, it kind of sweeps it. If we scroll across, I don't believe there was even an entry anyway on the M1 if you were kind of waiting for that confirmation entry, because arguably there's a 15-second one there, right? It's not great though. This is kind of why I'm saying you guys should really... Well, I would personally try and stick to them one as much as possible, even these areas. These are shitty areas, right? Not well priced whatsoever, because price comes in, the 15-second I'm talking about, as you can see it here. So price falls back, and then it breaks the high. It doesn't close above it on the M1, right? So it's not an M1 break of structure, but that would be a 15-second break of structure, right? Which means there's probably 15-second demand in here. So when price comes into it, it tries to make a 15-second higher high. It fails, right? So that's your 15-second supply zone, and then you get smashed. So yeah, this is where M1's a little bit better. So actually if I put the cursor there, it never gets a break of structure into over here. So it makes the higher high, it comes in, demand holds, it makes a higher high, and then it just comes in, it kind of smashes straight through that with no reaction, change of character, and yeah, for me there's no real entry. I mean, even if you looked at that inside bar as your last point of supply, price doesn't come back to it, so yeah, I can't really see an entry there. Then the trend continues. I'll show you this M15 zone. I kind of speculatively drew this on. I was keen to see if this would work out, because we had this pretty clear supply zone over here, and then I noticed these sell to buy wicks, always get them mixed up there, right? We pull back, and then that's where the last bit of demand stepped in to take out that high, take out that supply. So we came into here, and technically it spiked through it, so actually that zone did fail, but there was buy to sell wicks there anyway. And then when price came into it, we obviously got that reaction, but again, you see how it just spiked above it, it failed. So yeah, I'm not totally convinced by that. I think it's a bit more of a coincidence than necessarily something that I'm seeing as a really strong edge there. But yeah, I did kind of find that a little bit interesting to see if that would work out. Right, again, bearish flow staying intact. But now what's happened? Now we've come into that 4-hour zone. However, it's more of the range, right? It's not the refined zone that you may want to be a bit more accurate with. So what you can then do, if you take the whole 4-hour range, or what I would advise, is you then go and refine it yourself on the M15. And here we have a very clear zone, right? Mitigated this area here, and then led to that big move in, with that break of structure. So that's a pretty clean M15 zone. So yeah, when price finally comes into here, this is where potentially you can, look for longs before we get that M15 change of character. So, okay, that's not this bit. I was confused with what was going on there, because that looked like kind of crappy price action, right? So we first come into the 4-hour zone. Yes, it's technically valid to look for entries here if you want, but yeah, like I was saying, right, it's the edge of the range. That's where I'd refine it a little bit more. We have the M15 down here. So now when we come into here, this is refined. Aggressive movement in. And then let's see. Do we have anything clear here? So we have, right, that's our take of the low, right? That's the last low, because we're coming down, right? All of those prior candles break the low. We then pull back. We then take the low here. So that for me would be the high, right? So what we get is, you zoom right in. It's a little bit subtle, but see, when price comes into a refined area that you really, really like, this is what I'll do. I'll literally zoom in, and I'm literally just looking for that kind of first excuse to get in. I don't want to list all the confidence again, but this is the area, right? This is the last point of demand really that's going to hold if this 4-hour high low is going to form, right? So we come in, we have that low, which means this is our high. before we take that high, right? This is somewhere within here is going to be our supply, right? Our point of supply. Price comes into supply, right? It starts to react. So then I would mark out the top of the reaction, and I want to see obviously price ideally close above that reaction point. Price does, and at least it wicks above. We don't technically get a closure above, so it's not the best in the world. But what you can do is wait for that closure above if you want for even more confirmation. Price then again tries to drive lower and make a lower low. It fails to do so, and then we get that closure above. So then you can obviously buy anywhere within this whole buy to sell range, or refine it to that inside bar. Let's see how 2 pip stop lines up. Should be more than enough here. So stop below the low, get entered on the distal, and boom, you're off. Okay, so kind of the main, obviously we've seen this entry model 100 times now, right? So hopefully we should all be very, very used to it. But more the kind of main lesson, I guess, if there's one thing you took from this video here, would be kind of when to be aggressive with your entries and when not to be. And you know, for me, it's a reasonably simple point, but sometimes when you're in the market and you're sitting at your charts for hours every day, you can kind of forget that and get lost in trying to trade in every M15 zone and just jumping into the first M1 entry or even second entry. But really, you kind of have to ask yourself is how solid is this higher time frame zone? How well priced is it? And if it's just an M15 zone, right, like this one over here, after an M15 break of structure, yes, they can play out, but maybe you want to wait for a bit more confirmation. You want to wait for that M15 change of character first, especially over here, right, where we're just seeing constantly supply being held. You know, you want to wait for that M15 change of character until we come to then another strong 4-hour zone, for instance. Even better than if you can refine that 4-hour zone to an M15 or an M5 or even an M1, right? A zone you have a lot of confidence in, and then when it comes in, that's when you can go, okay, I don't even need to wait for an M15 chock if you don't want to, and you could trade kind of that first M1 or second entry. But of course, you don't have to do that. Now what we've got is a mitigation into a really strong level. We have our M15 change of character. We don't have a true breaker structure just yet, but you know what I mean? This can start to line up now for tomorrow to look for some decent entries, right? Not the highest probability in the world that we're definitely going to form a higher low from here, right? We could come down lower. But for me, that's how we start to really build up the confidence, and I'd be happy to start looking for longs from here tomorrow to, you know, try and push it up towards the highs. But obviously, we can start to look for short hedges from any supply zones that price may encounter as it attempts to try and push back up. And really, yeah, that's where I would leave it. So for me, that's the 4-hour range. We've now come in and mitigated the EQ of that zone, the refined M15 zone. We've got a pretty aggressive reaction away. So ideally, we kind of want to see that M15 switch bullish. We definitely have had a change of character. So I would be more than happy to start looking for some longs. We've already kind of had that flip there, right? That sell to buy, came back into it and mitigated it. So yeah, definitely longs are on the cards. But yeah, if we break and close below that 4-hour wick, then for me, that's the reaction failed. And we probably are going to start coming down lower in towards potentially this daily zone. So yeah, do keep an eye on that. So I'll leave that there. Hopefully you guys took some value from that. Yeah, I'm going to get back to trying to get as many of these bits of the course done as much as possible. Yeah, so I can release that to you guys before I go away. So I'll drop a message in Slack just to update you guys on all of that. So yeah, you'll know when that's ready to be viewed. And yeah, I don't think there's anything else I want to mention at this point. I hope you guys have a good end to the week. Yeah, and I'm just sorry, I'm getting absolutely brain dead now. I was just trying to think that there was something I wanted to say, but I can't remember what it is. So if I do remember, I will post it in Slack. Hope you guys have a good end to the week, and I'll see you in the next one. Cheers, guys.